No la voy a poner.
No.
All right. Hello, guys. I hope you all having a nice weekend. For today's weekly recap, we're going to have a nice special guest, Julian, talking about on-chain side metrics uh, of Bitcoin, and we're going to discuss about what has been happening with the market, what is our main vision for this upcoming week. So first, let's start with our partners.
PrimeXBT is the most powerful trading platform offering immediate access to over 30 assets. Trade cryptocurrencies, forex, commodities, stock indices, and much more, all from a single Bitcoin settled account. Visit the link below and start trading on PrimeXBT in minutes.
QuickTrust is a next-generation e-validation platform with patent-pending super NFT technology. Visit the future of NFTs at thebirdnest.com/QuickTrust.
EVI is a fully decentralized autonomous organization that has developed the world's first unbiased crypto asset rating platform. Built on peer-reviewed Nobel Prize-winning academic research, EVI helps to identify valuable assets in the emerging marketplace through artificial intelligence and machine learning.
All right, let's start. Hello, Julian. How are you doing?
Doing all right. Thank you for that great welcome. It's been an interesting week in crypto. Pretty flat though, mostly.
Yeah, I can agree on that. Yeah, it has been very boring as well. But technically speaking, it's Bitcoin especially is setting up for a big move on either side, since we are having this period of consolidation and a slow movement on the market, right?
Yeah, exactly. I think it's just the way everything is shaping up. People are getting really panicked and really scared of the price action, but really we've just had flat price action for the past week. So it's going to be interesting how it develops. It's definitely shaping up to be something interesting.
Awesome. Yeah, so maybe I'm going to start looking out for the weekly candle closure in Bitcoin, so we can start discussing on the charts. Is it fine?
Yeah, let's look at it.
All right. So let's go. Let's go for Bitcoin on the weekly chart. Let's turn off the replicator. So yeah, basically this weekly candle just closed as an inside bar candle. The previous weekly candle is basically engulfing this week, so this is a good sign of a slow movement, not a continuation of the downtrend. But this basically means that we have to wait for another week or a couple of weeks more to have a confirmation candle in either side. This weekly candle closed at above 800,000 dollars, which is basically the most important support that Bitcoin has right now. And any weekly closure below that level will hurt the Bitcoin price action on the long term. And it's possible that we are going to see more of a decline if equities start declining more from the macroeconomic side of things, right? So what I'm looking for on the weekly chart is this kind of two scenarios in which we will need to another couple of weekly candles closures in order to have confirmation for a possible reversal here, or a continuation to the downside, in which this widening wedge formation will be totally invalidated, and we'll have to wait for more price action development. What are your thoughts, John?
Yeah, I actually have kind of a big section drawn out on my chart, right around 35K, 34K. I think right now it definitely slowed down. We had a lot of volume last week with the fall of Terra. There was a lot of people scared in general.
Mhm.
And that really caused a lot of panic in the market. We haven't had that type of capitulation pretty much since 2018, which is pretty interesting to see. There was a lot of realized losses last week, like a huge amount that we haven't seen in a very long time. But this week really showed flat action, which is an interesting development. Because it just shows that the market essentially absorbed the panic from last week and then just relaxed a little bit. So it's going to be interesting to see how things kind of shape up moving forward after this kind of very abrupt week of panic.
Yeah, totally agree with that. When you said this, like it also shows us in the charts with these candle patterns as well that we're having right now with this inside bar, which basically means a slowdown in the price action that we were having from the last couple of months. This is good because since we are not dealing with normal macroeconomic conditions, like I think it's kind of naive to expect some kind of V-shaped recovery from Bitcoin from this zone, right? So, in my opinion, we are going to see more flat, more choppiness in the market for a couple of weeks or even months from here.
Yeah, I think like looking at kind of the bigger environment, there's a lot of talk on recession, on the US dollar being strong, on a couple other currencies being pretty weak. There's a lot of kind of outside factors on what's happening in the world. But what's been interesting is how a lot of the doom and like, oh, crypto or the markets are just going to go to zero really comes out near the bottom. It doesn't mean that this is the bottom. It doesn't mean that we are making a bottom. It's interesting sentiment that usually doesn't come out until we're near that zone. And honestly, bottoms take a long time to form. So it's going to be interesting to see if kind of the panic sticks around or if we're just going to get some nice flat price action as people panicked last week. And now we're just going to get some type of relief bounce or something. Something interesting on that Bitcoin chart, though, is that we've had 7 weeks, red weeks, that we haven't had in all of Bitcoin's history.
Mm-hmm.
So it's going to be interesting see how that develops. And it definitely feels like we're overdue for some type of a relief bounce or something.
Yeah, totally agree with that. In my chart here, you guys can see that I have this realized price trend line, which basically is right now sitting at 24,000. But maybe Julian can explain more of this realized price band and what does it mean for Bitcoin price.
Yeah, sure. If we can switch over to my my image, I'll share it here. I got the realized price right there. So the realized price is essentially the average price that Bitcoin has been traded at. On chain, it's a very good metric to kind of find bottoms in bear markets or bottoming areas in bear markets. At least if we kind of zoom out to Bitcoin's full history here, we can find the 2011 bear market bottom, 2015 bear market bottom, 2018 or 1918 bottom, COVID crash. Like, realized price is a very strong indicator for Bitcoin in terms of when it is for sure oversold. But not only is it oversold, but it's undervalued. Kind of zooming in a little bit more and looking at 2018, we had this very long bear market after we had kind of this sideways action for a very long time where we just kind of slowly bleeding throughout 2018. We finally had that final capitulation, which is just people finally losing all hope. And then we had about 4 months down here in the range below the realized price until we finally made it back above it. And pretty much since COVID, where we tested it for right around a week, we haven't tested the realized price area.
Mhm.
It's going to be really interesting to see how price reacts, especially having the all-time high right around 20K, realized price sitting at 24K. So this is a very interesting zone for Bitcoin to either test or just have in mind for the future to see how that area develops.
Yeah, totally. That's why on my charts I have that trend line, because like it's not required that Bitcoin has to go all the way towards the realized price, but it like you say, it's totally a zone in which we want to be aware if Bitcoin keeps declining. So, and this price also has been historically the realized price area zone in which historically has been the uh, best point of entry in terms of long-term accumulation of Bitcoin from investor side to buy Bitcoin below this area or when it's interacting with it.
Yeah, definitely. It's one of the best areas in terms of risk reward when you're talking about Bitcoin. For the long-term investors, it's really the best time to buy and then just wait until you get back above it. That's one way to trade it, or just wait until you get far above it into the next bull market. So if you kind of zoom out, take kind of your time with judging the market, realized price is one of those very important areas as a long-term investor to just accumulate as much as possible.
Yeah, totally. I agree with that. Now we can go ahead with the daily chart on Bitcoin. Second, let's go. So on the daily chart, basically what we are seeing here is that Bitcoin is trading above the 29,500 support. The last daily candle closed as a confirmation candle after this inside bar pattern interacting with the support area, which is a nice sign that possibly this is going to be a positive week for Bitcoin. And basically what we need to see is that equities start moving bullish as well, since they are sitting in a strong support too, just as Bitcoin. And the next resistance area for Bitcoin will be 32,350, which if we break above that level, then it's possible that we are going to see that relief bounce towards 36,000, 37,000, and possibly towards this lower high trend line that has been forming over the past few months. It's important also to take into consideration the S&P 500 on the weekly chart as well. We were trading inside this kind of a falling wedge formation on the weekly, and now has been invalidated. The only way to validate it again is for this week to start trading inside this falling wedge formation again. But right now, the S&P has been holding well on this area of support at 38.57. But in order to reclaim the bullishness side of things, it would be nice to see the S&P to trade above 40.60. But let's take a look at the daily chart. The Friday daily candle close, it can be considered as a doji, but it also can be considered as a bullish pin bar because of the formation. And the only way to confirm this would be to wait for the daily closure that we're going to have tomorrow. After that daily closure, we will see possibly the direction of the whole week ahead. And on Bitcoin, we're having kind of the same price behavior, in which it's possible that this week we are going to see a positive move. maybe you can share your thoughts on there, Julian.
Yeah, I mean, looking kind of at the S&P, the futures are right now opening a little green, which tends to be positive if we're already green. Kind of for the start of the week, everything is looking like it should be bouncing. We should be getting some type of push, 33, 34. But it is looking more like a relief rally. I was just looking at the realized profits and loss over here, and we can actually see we had one of the biggest spikes since January. We had a pretty big loss spike, but pretty much May has been one of the strongest realized losses we've had in a very long time for a while. Pretty much since the summer of 2021, when a lot of people kind of lost hope in June. So a lot of people realizing losses makes for a lot of headwinds. That means whenever price tries to recover, people are going to be either realizing losses just below their break even, or they're just going to be realizing profits just at break even or just above break even. So it creates kind of this pressure sell side from above, because people are just trying to exit as unscathed as possible. So with people kind of losing hope, we do get certain headwinds keeping price down for a bit.
Yeah, totally. And talking about this, we can also take a look at the whale behavior, because since you're talking about retail investors and trying to sell their holdings on break even or with little loss, it can also be possible that this area in which Bitcoin is sitting right now could be a good price for institutions and whales to start accumulating from retail traders selling their holdings, right?
I mean, yeah, that's not wrong. If we look at addresses with more than 10 Bitcoin, those have been climbing pretty much since February. They've been steady, not super aggressively climbing. One of the biggest things I've seen people talking about is addresses with 1 Bitcoin or 0.1 Bitcoin. They say like, oh, those are going to be the first to stop when recession hits and bear markets and so on. But if you look at the smaller retail addresses, like these have been steady dollar cost averaging pretty much forever, still making all-time highs. Addresses with 1 Bitcoin are making all-time highs now. If we go to like the bigger whales with 100 Bitcoin, they had definitely had they took a lot of profits during that push towards 45K a while ago. Since then, they've accumulated a little more, but we really haven't had levels of accumulation since 2012, like it's been a while since those addresses really added to their wallets. Kind of comparing it to the 1K addresses, we had that huge spike over here in March where they just added a bunch, but this could have been just the Luna Foundation Guard when they bought. Sailor also has been buying, so some of those purchases definitely are affected, and we can see they definitely have been lowered since that last big crash. And then finally, like the biggest whales, 10K plus Bitcoin, we can see those have definitely been accumulating pretty much since the end of February. We've seen a couple more of those been added. So it's been interesting to kind of track the size of these different addresses. If we can actually look at the ETFs, we can kind of start estimating how much these have been growing. So if we look at the CoinShares ETF, for example, their holdings actually, we can kind of see how much they've been adding or not adding. They've been relatively flat, but overall Bitcoin ETFs have been adding pretty steadily. We can see they had a pretty big accumulation in that last drop, especially the Australian ETFs that just launched. There was 4 Australian ETFs, or sorry, 3 that launched in the past month, and those have been being forced to buy the Canadian ETF because they can't buy Bitcoin directly for some reason. So they've been buying Canadian ETF, and the Canadian ETF has been buying a bunch of Bitcoin to kind of cater to that demand suddenly. So we can see that these ETF holdings have been kind of definitely growing, even if they seem to have taken some profit in the 45K area maybe. So it's definitely interesting to see how these bigger institutions are behaving, especially because a lot of retail is really panicking when you see kind of these bigger, I don't want to call it smarter money, because most ETFs have lost money in 2021. So I don't particularly think they're smart money, but it's definitely bigger money. So it's interesting to watch how they're behaving, basically accumulating throughout the month of May.
Awesome insights there. It's also important to notice the behavior coming from the DXY index, the dollar index. I would like to address on that. This weekly candle closure is extremely important for risk on assets, since this represents a bearish engulfing candle on the weekly side, on the weekly chart. We can take also into consideration the verificator prop from the bird nest. It's also signaling bearish divergence on this resistance area at 103.55. And in terms of technical analysis, it should be possible that we are going to see more of a downside on the DXY towards the next support at 101.05. And if that support is broken, then the next major support would be at 99.3. If that actually happens, then everything is setting up on both equities and crypto side for a relief bounce. This doesn't mean that the DXY will be completely moving bearish, because it can just represent a pullback from this recent this recent bullish move. And it's important to notice this on the weekly and on the daily. We are also seeing this same behavior, taking into consideration the baseline from the verificator. I would like to see a breakdown from this baseline and a confirmation candle after that, because the last breakdown basically was a fake out that was recovered fast on the next day. So what I would like to see is a breakdown from this baseline. And on the daily chart, the next support zone will be at 101.25. And on the side of the S&P 500, we can possibly see this relief bounce, but we also have to take into consideration the fundamental side of things, in which this week we have some important news event. Basically on Tuesday we have Powell speaking, and on Wednesday we have the FOMC meeting. So possibly the market's going to be a little volatile during today, like on Monday, and possibly we're going to see some flat price action until the event. And these events will basically set the tone for the next movements, both on the XY and equities, on crypto, for sure.
Yeah, it always gets volatile when Powell speaks.
Yeah. So it's important to notice that, because what the charts are telling me, it's basically that we're going to see some upside pressure, but obviously this can get totally, this bullish pressure can disappear when Powell speaks, and we can totally see some panic if he talks about 75 basis point rate hike, or some aggressive approach from the Fed side on reducing the balance sheet. What are your thoughts about these macroeconomic events?
Yeah, I think Powell and the Fed is just they have their back against the wall. They're you know they have essentially two options: keep raising rates until the market crashes. I mean, not saying the market hasn't already crashed, but just the overall U.S. market economic sense, more felt from the retail side, housing. There's a lot of other stuff that hasn't necessarily been felt. They keep blaming inflation on outside things like whether it's Putin or COVID or shortages or whatever they want to call it. They keep finding an excuse for inflation other than the fact that they printed more than their more US dollars than have ever existed. They printed pretty much double the US dollars in like 2 years, which is just crazy. But they keep looking for excuses to for inflation. So until this changes, in terms of monetary policy of just printing your way out of problems, um, their only way right now is to raise rates, and by raising rates, you're gonna cause other issues. Specifically, the housing bubble, I think, is one of those big ones that is kind of being ignored to a certain extent, especially in the US. People still have houses, they still try to um, refinance or everyone justifies that the housing crisis will be fine. The issue is you're looking at it isolated versus everything else happening in the world. So it's okay if they raise rates and then your mortgage goes up a little bit if that's in an isolated place. However, once that is mixed with higher gas and higher electricity and more expensive internet, and you start adding all of these things that become more expensive, people stop being able to afford those higher rates. And then when you can't afford to keep all those houses, which is one of the big things in the US, people are speculating with buying 3 houses, and you see these crazy TikTok videos of how you can, become a millionaire in assets because you own 3 houses worth 3 million, but in reality, you're 2.9 million in debt. And you have these assets, but all of that is really all just debt. um, Thing with debt is that you're playing hot potato, and banks are just playing hot potato until it finally explodes on someone.
Mhm.
And that's only going to happen once the Fed, or with the Fed continuing to raise rates. It's going to get to the point where either that hot potato is going to explode on someone, or they're just not going to raise it enough to where inflation's just going to continue and keep getting higher. So it's like the Fed is just playing will I, won't I until something happens. Realistically, if we look at something like what Raul Paul has been talking about, great investor, more likely they're just going to have to go to something like a stimulus check again to re-incentivize the economy, not because of COVID, but because inflation is too hard for people to kind of keep up. So it's more likely that you're going to have some type of stimulus check where they're just trying to incentivize people to spend because no one has spending, like spending power. If we look at savings, there's this chart that we can actually track over here in terms of personal savings as a percentage of disposable personal income. Seems like very long worded, but in kind of very, very clear and easy to understand sense. This chart just shows us how much people have in terms of savings to spend in the market. And we can see we had this big spike in 2020. Right after COVID, people had a lot of savings. People were not spending money. They didn't have anything to spend. People couldn't travel. People couldn't go out to eat. So there was a lot of savings that were built up. However, once the economy kind of reopened, but also people were forced to pay rent again, or a lot of the things that happened in COVID started to catch up with the market, people have been losing their savings and disposable income have been going down. We're actually at lows we haven't really seen since 2014, 2013. So that's going to be really interesting to see if people don't have money to spend and throw around, what can the Fed really do to manage that inflation? Because people aren't saving money and money starts to become tight. The Fed's going to have to do something to incentivize growth, because that's, if you look at what Powell says, everything he focuses on is as long as there are jobs and economic growth, they can manage the rest. The issue is if you don't have income and disposable income, jobs start to go down, and it's harder to, for example, hire a second person at a job or open up a second store or a second restaurant. So the economy starts to slow down a lot more because there just isn't enough money for growth. So I think it towards the end of the year, we're really going to have some type of breaking point where either the Fed is going to give in and kind of step back, or they're just going to have to double down and forget their soft landing and just go into full recession mode. I think that was a really long way of kind of breaking down what you were saying, Nick.
Obviously, yeah, totally agree with that. And obviously, with having some kind of a stimulus checks, that would obviously be good for crypto markets and equities, like we saw from the COVID crash, and then making all-time highs while the whole world was in chaos because of basically the stimulus, right? So in that scenario, like you said, possibly at the end of the year or the last quarter of 2022, we can see the Fed trying to, like you said, being more aggressive, totally forget about the soft landing, or trying to stimulate the economy more. But in this case, the markets will either continue to decline or start just moving choppy, and until there's something like something important that will obviously change the bear direction that we are having right now. And in that case, we are going to see boring markets for all of this year, right? So in that scenario, so talking about like on the for my side of things, my approach right now is trying to trade on an intraday basis, because trying to get some kind of long-term investment or trying to swing trade has been completely unstable in terms of win rate, risk management, and all that stuff, because you are having a good trade, you're having a good position, and then it gets messed up because of some fundamental news or any comments coming from the macroeconomic issues we're having right now. So basically, my approach right now is taking into the 4-hour chart or the 1-hour chart in order to try to intraday trade these ranges that we're having right now. And we have seen this little pump on the weekend that basically make that the weekly closure above 28,800, which was good. But even for intraday trading, and it's been kind of difficult. And I can say that because, as you guys know, I have been attempting this FTMO challenge, which was not successful. because my strategy for the intraday trading is not working well in these conditions, which is fine. I don't know if you trade on an intraday basis, what would be your opinion for that?
Yeah, I think it's something I talked with Adrian Burb when I had my podcast with him. I think this whole year is a year where you're either looking at the next 8 hours or you're looking at the next 3 years. It means either you're trading super paranoid and always looking to close a trade, or you're just really not caring at all about the price and looking more at very, very long-term investments. Otherwise, anything in between, which is a lot, is just chaos to a certain extent.
Totally. Yeah, I have been having some issues with the intraday trading, like you said. Right now, maybe for the members, I'm going to look at the weekly closure on Ethereum. That Ethereum basically has been following Bitcoin price action. It has been holding stronger since we haven't got below this 2021 low at 1680, and we are having the same price development on Ethereum, which basically is this inside bar formation that will require breakout candle, and that breakout candle will come from any behavior on Bitcoin. So talking about like the daily chart, the daily chart is exactly like, well, not exactly, but it's behaving very closely like Bitcoin. We have this inside bar formation, this breakout candle, but I have my approach for trading these markets. Like, I stopped trading altcoins for quite a while because the instability on the crypto market has been wild, and basically every altcoin, obviously with some exceptions, are just following Bitcoin price action, and you basically just can trade Bitcoin and get rid of all of the other noise. But in terms of Ethereum on the daily chart, we would like to see this breakout to the upside, and the next resistance area, it would be 2165, and if we break out above it, the next resistance area would be 2438. Maybe you can share some on-chain metrics on Ethereum to see if it's developing differently from Bitcoin.
It's been pretty similar actually. Looking at Ethereum overall. I think the most interesting thing with Ethereum is just the news on the merge happening. If we look at some of the on-chain metrics, Ethereum Foundation over here has just, I don't know if they have just the best traders in the world. They always sell the top, like, perfectly. So they sold over here. This big spike in dormancy was Ethereum Foundation that hadn't sold Ethereum in a long time. They sold the top in November. They also actually sold the top in 2018 over here. Less dormancy though. So yeah, the Ethereum Foundation, they're gonna have a long roadway. So no problems in development there. But in terms of kind of on-chain balance and what's been happening, it's actually a lot closer to the realized price. If we look at the MVRV score, which is historically like the best times to buy Ethereum, we're getting really close to that. If Ethereum goes into that zone, I will be accumulating pretty hard. I actually have it painted out on my weekly chart over here. I have this accumulation station on Ethereum. I have this big red mark. I would be extremely surprised if we don't test this 2500 range before coming down into this nice area for accumulation on Ethereum. The merge should be happening in August, so I'm actually just gonna add that in now because it's probably going to be the most important event for crypto of the year. So right around here, we should be getting the merge. And it gives us right around 3.5 months. Until then, in order to get that confirmation on June 9th, we are Ethereum is going to have a testnet. It's essentially a big test of the merge on a testnet, which is going to kind of see if Ethereum merge is going to happen or not. So when we get that confirmation on June 9th, which it all looks like it will be happening, I'm expecting Ethereum probably gets that nice bump up, 25K. I mean 2,500, and then probably over the summer people are gonna fade it or whatever. Nice area for Ethereum, matching realized price, matching MVRV, matching a couple different things. If I zoom out, we can see it matches that all-time high over here in 2018. So I just have this nice range for Ethereum where I'm just really going to be patient for it to get down here and just essentially buy as much as possible pre-merge. And once the merge happens, there's just going to be a lot happening on Ethereum. I think it's one of those trades that has been faded quite a bit overall.
Awesome. Yeah. My opinion is like quite the same for that. I'm expecting kind of a relief bounce here from equities in crypto, but I have like this kind of sense that we will be expecting more downside towards these areas that we have been marking on the charts, like this accumulation station on Ethereum, and in my case, the Bitcoin weekly area of the realized price, in which my approach to the market will be to start also accumulating Bitcoin and Ethereum. So we, in my opinion, we will need to be patient here with the market. For intraday traders, be patient. Don't respect your risk management always. And I don't think we're going to have a big move soon from the crypto side. The only way that we can get that move will come from an outside catalyst, from a good like source of news, that we are having some kind of bullish sentiment for Bitcoin on this news that could actually change the price direction that we're having right now. But for now, I would recommend to try to be sidelined and wait for more price action development. What could be your recommendations for the people seeing us tonight?
Yeah, I think it goes back to what I was saying. If you're day trading, keep it short, keep it sweet, try to exit as quickly as possible because the market's really erratic. Otherwise, you're just gonna have to be patient. Come back in 2 weeks, check it once a week, really. Go outside, do something else, wait for those price targets, paint really clear price targets. I think the biggest issue is a lot of people make a plan, and then when price gets there, they get greedy and they say, okay, never mind, I'll buy it when it goes lower. I'll buy it when it goes lower, or I'll sell when it goes higher. And they don't stick to that plan, and you would just be way better off sticking to that initial plan. And that's why kind of looking at the weekly, it makes it really easy to make those plans. And right now, I do think it's good opportunity for everyone to make a clear plan, paint clear prices that they can follow, so that you don't have to be looking at the screen all day unless you are trading, and then really you only need to look at the screen for a couple hours, because any trade that lasts longer than a couple hours is probably not going to go in your favor with the market choppiness at the moment.
Totally. Yeah. So I think that would be all for today. thank you very much, Julian, for joining me on this weekly recap. Really appreciate your thoughts and your expertise. Be patient, guys. This is going to be a rough path until we have a clear direction on the market. So always respect your risk management. And from my side, that would be all. Thank you very much, guys.
Thanks so much, Nick. This was great. Guys, remember, any questions, just pop them in the Discord. If you're not in the Discord, use the trial. You can join for a couple days. Look at all the calls we're doing there. We're sharing really good information inside the Burb Nest, so don't miss out on that. You can follow us on Twitter. If you don't follow the Burb Nest, if you're not subscribed to the YouTube, make sure to subscribe and follow. But also follow Nick on Twitter on Chain Labs. You can follow me, King Julian I am. I think that's pretty much it. Thanks, Nick.
Awesome. See you in the nest, Julian.
See you in the nest.
Bye-bye.